Hey guys, welcome. Brian and Joel coming to you from the trade room here today. Hey, thought we would throw this out here and let everybody take a look at something going on that was pretty interesting here in the market today. I was checking out Virgin Galactic, had a few students talking to me about it. Been paying a lot of attention to it on the news. There's a lot of action there. You know, funny thing about it is I couldn't really figure out exactly what's driving the cost up here. I know that they're one of the few, or I guess they're actually the only space travel company that's publicly traded now. So I guess that has something to do with it. But it has gone crazy. So I was checking this out today and taking a look at what I might do here if I could take advantage of the stock, maybe moving up a little bit, looking at some bullish positions. Then I thought, wait a minute, this could really turn around the other way. So I looked at some bearish positions. Bottom line is I didn't really come up with a fantastic trade idea, but I noticed the puts on this thing are very, very expensive in comparison to the calls over here. And I thought, man, what a great thing for us to talk about here in the trade room and kind of give you folks a little bit of input about how and why that happens. So, Joel, you want to check that out with them?
Yeah. So here we are, we're looking at Virgin Galactic, and it is crazy. You see this every now and then. Normally, if you're looking at an at-the-money call and an at-the-money put on the same stock with the same expiration, they're going to be trading for about the same dollar amount. But this is crazy. I mean, that put is more than 25% more expensive than the call. And so I wanted to take a look and see if I could figure out why. Now, our first clue comes from just looking at the implied volatilities of these options. And implied volatility is another way of expressing demand for the options. When demand for the options go up, they get more expensive. Then people are willing to pay that because they're expecting more volatility. That's kind of a sideways way to explain it. But look at the calls, 1.83 versus the puts at 2.58. So you can see there's a lot more volatility priced into the puts than the calls, but that's not really, I think, the right answer about what's going on here. I think the right answer is because of what's going on with the trading activity on Virgin Galactic. If you look at the volume on this, today we had 134 million shares traded on Virgin Galactic. And that's a lot. That's a big number because there are only about, I think it's 54 million shares in the public float, meaning those 54 million shares were being traded over and over and over again today. That means the people who are buying into this are not your long-term investors trying to build up a position.
No, that is some serious day trading going on right there. That's just nuts.
That's exactly what's going on. You've got all of these short-term probably day trading and momentum type traders really coming in heavily here. It's making this a really, really speculative stock. And combine that with you've got earnings coming up. What that does when a stock gets really speculative in the way it's trading, it drives up the cost to borrow shares. And that means if somebody wants to short shares, they're having to pay a higher interest rate. And what that does, because of put call parity, which the market is rational, by the way, guys, when it comes to pricing options. I know it's not always rational in the way it moves, but when it comes to pricing options, the market follows the math, the put call parity formulas. And if you've been to any of our classes on this put call parity, you know that interest rates are part of that parity model. Now, where this comes into action on a stock like Virgin Galactic is you got to think of these market makers, the middlemen in the market. Now they're filling the option orders and sometimes taking a position, but what they have to do is they have to offset that position, sometimes by short selling the stock. And so they have to short sell the stock, and their cost to short sell the stock is going through the roof. They're having to pay a much higher interest rate, and that is going to drive up the prices of the puts. And so I think that's what what's actually going on here on Virgin Galactic is because of the speculative nature of the trading, because of the really high short interest in this stock, combined with the fact that we've got earnings coming up here really, really shortly, driving the cost to borrow stock up, which necessitates an increase in the value of the puts. And I think that's most likely what's going on here. So the question, of course, is how do you trade it, right?
Yeah. I decided not to.
There you go. When things aren't making sense, when things are difficult, move on to something easier. Is there an opportunity here? Maybe, but do you really want to deal with these really wide bid-ask spreads and implied volatility of 232? There's
232 implied volatility. And I believe we were looking earlier at the S&P 500. What's the implied volatility on that?
Let's look. Let's look at the actual implied volatility on the S&P 500 right now. Oh, this one takes forever. I'm going to look at SPY. That's close enough. 13.
Ooh, 13 versus 230.
Yeah. So what that 230 means, by the way, guys, is the market's expecting Virgin Galactic to move at an annualized rate of 232% right now. That's crazy. And it's making the options difficult to trade. So the more you know, I guess the better you are at avoiding these kind of situations.
Yeah, I would agree. Just, understanding how that works makes me generally shy away from this sort of thing in the first place. But, there may be opportunities out there if it slows down a little bit. In the meantime, check this out on your own. See what you think. Play around with some spreads on it. Do some different things. Have some fun. Certainly not recommending you do a live trade on this. I just want you to play with the options chain. And we'll catch up with you next time. Thanks.